Purinjo Veliathan, MD and Portfolio Manager at Equity Intelligence India, he joins us in the show to analyze where the markets are headed from here. Purinjo, a fair bit of vicious moves in the market of late. We've tested levels of sub 8100 as well. Is it time to keep the shopping bags ready, or do you think the market is going to significantly go down even from these levels?
I feel this time, even though there was major kind of ups and downs in the market, the investing community, I feel they are more or less stable and feel comfortable staying invested in the market. Those who are thinking rationally, beyond the small hitches and kind of news, people talk so much about monsoon. Now they all, it's very surprising. People look for, analyze too much about whether the RBI governor will cut it by 25 basis point or 50 basis point or no cut. I'm telling you, for investors, these are not at all important. A lot of such factors, now people, maybe they might have stopped talking about the US rate hike or the Greece, but now mostly the domestic subjects are being talked about. See, investors have nothing to worry. I am very confident about the wealth creation process, going forward. Next 1 year, 2 year, or 3 year, or 5 years time, equity will continue to be the best asset class. If you are looking at 25–30% kind of returns, or I would say at least 15–20% kind of a CAGR for next 5 years. No other asset class can give you that kind of a return, and I am very confident about that.
Purinjo, the last time, good morning of course, the last time that we spoke, you were talking about you being in the mode of looking out for businesses which may have a bad management but which are turning around. The question is that this market fall is giving you good management and good companies at good prices as well. So are you changing your stock picking, or are you still sticking to what you were doing a month ago?
Good companies with good managements, I think they can still go down. Means because there were too much hype, and these stocks have been, I would say, to some kind of overvaluation kind of levels. So that what you're seeing. There can be further, stagnation or some slight decline in these kind of stocks. I am again focusing on the bad quarterly numbers and not so good companies. And now one theme I was talking about in the last interview. Look at companies which are changing profile. And I can see some, say, 500 companies in this country, small companies or some medium companies, wherein a lot of changes happening. Changes, changes from the last few decades to a new decade. They are changing their style of operation, and especially among the listed companies, they are taking care of the investors. A lot of them started respecting the minority shareholders. They started communicating with the investors. They started appointing the investment relation agencies. I think, many companies, these 500 companies, what I was talking, the number, approximately, if they communicate better with the investing community, if they appoint an IR agency, their market caps can double in the next 1 year.
Right.
See
but
the
I'm just going
opportunity
through your morning note, and it's interesting to say, for you to write saying that you like two bad stocks, Tata Power and GVK. Why are they bad, and if they are that bad, why do you like them?
I like bad companies, but good stocks, which I have clarified earlier. Bad stocks are bad. Don't buy bad stocks. See here, people make some good companies, the stock into the penny kind of category, and but I'm again telling, India has a lot of them. Still, people are not realizing. They are looking at some media discussed kind of stocks, or some operator-driven stocks, or some large FIS buying stocks. See, our market is much beyond that. The real opportunity, if you're looking for next 5 years, lying there. Now I am in Delhi. I visited some 6–7 companies in the last 4 or 5 days. I am feeling that change happening in many of these companies. Some companies like highly branded products they have spent 100 crores in the last 5 years on brand building. Companies very profitable, growing at 20% CAGR, and the companies available at the 100 crores market cap, which they spent, the money they spent last 5 years to create the brand. and this brand is going to grow and create wealth for the shareholders in the future. So those kind of irrational, I would say, low valuations are still rampant in the market. Now, I found some people talking about, look at companies which are in the 52-week high. It's very easy to say, but is it the thing one should really look at? I'm telling you, there are companies, even last few days markets have been so bad. I think some 52 companies were in the 1-year high.
Okay.
There could be, but I feel this is the time to look at some companies which are 52-week low. It makes sense. There are companies, and the trading community have been trapped and they have been selling off.
Right.
Some management, they are not transparent, they are not communicating. Yeah.
Okay, so I'm curious to know that why do you like GVK? Now, hear me out. GVK has a broken down balance sheet, a debt of nearly $4 billion plus. The road business is in a problem. They own 2 fancy airports in India, and those airports right now are struggling and accepting a bit of uptick in the passenger, passengers are going to the airport. There is nothing happening in the company. Do you like GVK just because it is a 7 rupee stock, it is at a 52-week low and everybody hates it?
Not exactly. I can give you 100 reasons not to buy GVK at this point of time, but I can give you one good reason to buy it. It is underpriced. Looking at the fundamentals, its future, its assets and liabilities, its debt. The company has around 22,000 crores of debt. It's a 1,200 crores market cap. See, there are a lot of companies in that list, but here I am selecting GVK because when we look at each of the assets of this company and their debt and kind of things, I feel this is one almost sure survivor in the industry. There are a lot of them which we can't be sure about the survival. That is why I selected this company. I'm not telling this is a foolproof 100% great value investing. There is a risk. I'm not completely ruling out the risk, but my gut feeling is that there is no risk. And at this kind of evaluation, they can come out of the problems. They have enough wealth. If they do the right things, they can come out of the problem.
Yeah, can you just, Purinju, I'm just inquisitive out here again. 22,000 crores of debt, maybe slightly more than that as well. The airport business is fine. The gas-based power plants are not working. The BOT projects are not working for them. How will they come out of the problem?
They have running road projects, which is earning a lot of income. They have running power projects which is making money. They have some projects in pipeline, some are in the problem. See, it's a very simple common sense. Any small guy can do it. Have their assets on one side, just try to value it, the Mumbai airport, the Bangalore airport, and this is I think it's comparatively a bit better management among those Landcos and GMRs, I personally feel. So this is like a sure survivor. That's what I feel. And if it survives, this can be a multi-bagger. This can be a 10,000 crores or 15,000 crores market cap company in next 2, 3, 4, I don't know. So that can be, so if you select such 10 companies in your portfolio, I'm not talking from the sector, a sure survivor which is at distressed valuations, which has problems today, and there is some visibility emerging, Neeraj, regarding, some of the problems are going to get settled, and government has to do things to settle these issues, or we are heading for bigger trouble. The power sector can kill this economy.
Right, sure
and the banking system.
Yes, we've seen signs of that already playing out, haven't we, Purinju? But I want to revisit some of your erstwhile recommendations. DLF, now because of the chop and churn in the market, it's sure taking its toll on some of these realty companies. Does DLF still continue to be a hold? Have you added positions in the recent downfall? How are you approaching the name?
Yeah, I remember my first interview a few months back with ET-Now. DLF was the stock I suggested, and it was exactly the same price today, at 108, 9, 10, and the stock went to some 165, 70 levels, just come back to the same price. That's the kind of volatility in this market nowadays. DLF, even Anandraj, that's a company I even had visited the people, to share their vision going forward. How are they going to manage the current problems or negatives in the industry. See, I feel these companies are going to have a much better time despite the kind of slowdown going on. And see, at these prices of real estate, I don't think the activity will pick up. Activity or buying and selling of flats or properties will happen at a slightly lower price. It may be 20% decline, 30% decline, I don't know. And how much time it will take, I don't know, maybe 6 months, 1 year, 2 years. But at that level, these companies have got a huge value. And today, but at the same time, in the simple terms, again coming back to assets and liabilities, they are underpriced. So that is the reason I feel good about these companies even at this point of time. I have holding in Anand Raj, so I'm not just telling about a single stock. I bought Anand Raj at 45 and upwards. Today the price is some 33, 34 rupees. So there is no point in recommending. I'm not into that thing. See, there is value. And not only these stocks, generally in the sector, but you can avoid companies which are too much stressed. You know, when there is absolute lack of transparency from the managements. So we have to be very choosy in any segment. So sometimes and most times the multi-baggers emerge from not so well-doing industries. That's what I'm trying to tell you.
Purinju, I missed out on this one. Do you still own DLF?
We sold DLF, we booked profit because the rise was very fast. I thought it was not sustainable, so we exited. And I am liking it now.
Okay, Purinju.
I'm not recommending the stock. I have a position in the stock.
No, you've been candid enough for that as well. But thanks so much for giving us that clarification too. And as always, really good having you. Interesting to hear out your investment thesis as well. Thanks for joining us today.